What's up, YouTube? Steven here. Got a special video for you today. I'm going to give you a little insight into my trading account, my trading techniques. I'm going to show you today how I made $42,000 this morning in 28 minutes trading the most beloved asset on planet Earth, FARTCOIN. You can see the trade right there. There's the unrealized P&L. There's our entry, all that good stuff. Not LARPing you over here. We're going to start off on the weekly chart. Going to mark out our key high time frame range low right here. You can see the sweep of this level, strong reaction from that 1010 nuke, and then we kind of came back down into it for a second test, put in a nice weekly sweep, and then an expansion candle here. And then the critical thing to note on this weekly expansion candle in particular is that you get the close above the mid-range of the level. All this to me says that, this high here, this weekly high, is likely to be a good target for a continuation trade. And so we're coming into the week looking to take something up to, roughly 0.384 or so, that weekly high. Now, although the setup looks good here on the weekly candles, I like to pair the weekly bias with the 4-hour chart for market structure. And what I want to see on the 4-hour chart when I have that weekly sweep is I want to see some sort of market structure shift, some sort of change in order flow. You can see here that the order flow has been bearish, right? There's been kind of lower lows, lower highs. And then here we have a shift, right? And not only do we put in this higher high, I like to especially pay attention to something called a change in the state of the delivery. And a change in the state of delivery is when you have a sequence of down close candles. This is a bullish change in the state of delivery. You've got a sequence of down close candles. See all this sequence of red or whatever this color is, blue candles, very colorblind, down here into a key level. And then you get a close above on the same time frame. So right here, we get the change in the state of delivery. And then we get a nice consolidation above this zone coming in to the new week. And the weekly open, I believe, was, right here. So here's your weekly open. We'll mark that out. Let's just hide this so it's not cluttered on you. Okay, so coming into the week, we've got a really nice setup here. And what we're looking for is we're looking to basically trade the next week's candle, right? And when you have a candle, you've typically got the body, right? You've got the high, you've got the low, you've got the open, and you've got the close, right? This is a candle. So when I'm thinking about trading, I'm thinking about, okay, I'm bullish. I want to position in the wick of the next candle. So I'm expecting the week to open. I'm expecting a down move into some bullish area, probably to grab some liquidity. And then I'm expecting to take that candle up to its target, right? So after the weekly open, we get this dump down. And these dumps down immediately after weekly opens, monthly opens, daily opens are sometimes pretty sus. Like, they're very frequently reversed. So interesting thing to look out for, like if you're expecting some sort of move in the opposite direction and you get what appears to be a fake out, it might actually be a fake out given the timing of that move, right? So we get a pretty clear run of liquidity. We take some liquidity there. We take some liquidity there. We're looking for this area to be respected, especially the mid-range, right? We don't want to see some closures of 4-hour candles below here. Otherwise, this idea is probably not valid. The other thing to note on the 4-hour chart here, a couple things. One, we get this beautiful little sweep candle, just very clean. See that nice respect of this low. When this dump happens, we also get this imbalance here. Is a bearish 4-hour fair value gap. And then you can see, as a reaction to that, we not only close through this level, but we do so putting in fair value gap there, right? So there's impulsive price action back in the other way. Expansion met with expansion out of an area that we're expecting a bullish reversal from. So at this point, once this happens, I am now in the mindset to look for a long, and I'm looking for price as it's consolidating here to come back down here somewhere and to take it to here, right? So now that I've got the 4-hour trigger and it's all lined up with the weekly chart, what I'm going to do is drop down to the 15-minute time frame. So the 15-minute time frame pairs nicely with the 4-hour time frame. And once the 4-hour time frame has given me the trigger that it's likely expanding, I am now expecting bullish zones on the 15-minute chart to be respected. So I am expecting us to put in these like higher lows, retraces, respect those zones, continue higher, that sort of thing. I'm not expecting these lows to get violated. So if I pop on my session indicator here, and sorry, this gets a little cluttered, but you can see the color code for the sessions, right? Like, so this color is the Asia session. This color is the London session, New York morning, New York afternoon, New York lunch, New York afternoon, and then we have a new day start right here. So at the start of the new day, I'm now looking for a similar thing to happen that I just explained with the weekly candle, right? I'm expecting a daily candle to form, right? I'm expecting the day to open right here. I'm expecting a wick down, and then I want to trade the expansion higher of that candle to this weekly target that I outlined to start the video. So the mental model, again, is very similar. We have a bullish zone. We have a strong move out of the zone, consolidation, acceptance above the zone, right? And then we get the daily open somewhere here. So what I did last night is I immediately bought about 20% of the position size, just so I had some exposure. And then I placed a limit order right here, which is about where the weekly open was, planning to take it to our high. Now, as you can see, I woke up this morning and to my dismay, my limit order had been front run. So I had some exposure here, but I did not have all the size on that I wanted. And this doesn't mean I can't take the trade anymore. It just means I have to take a continuation trade. Like I have to look for some sort of lower time frame sweep and then like zone to form and then enter on that. So once again, using this mindset of open, low, high, close, I'm shifting now towards thinking about the New York Open, right? So the New York Open is typically where you get a lot of the best entries and the best movements on trades because it's a time of like very high volatility, very high liquidity. And when you enter on a fake out during the New York Open, there's often a very high chance that the move goes back in your favor and does so very quickly. Like if you were right to assess that the market is currently in expansion and your target hasn't been hit yet, right? So what are we looking for at the New York Open? We are looking for price to come into some sort of high time frame, or in this case, like a lower time frame level, right? So we've got price up here consolidating, right? We're looking for price to manipulate down to take some sort of key level and then to go higher and then confirm that, right? Because price can sometimes do that and then just jump down. So we're looking for some sort of model like that. Now in a perfect world, at the New York Open, price would have just cleanly moved into this zone and given us a perfect entry at the daily open, and up we go. But I noticed looking at the 1 hour candles coming into the New York Open, which was like around, roughly here, not exactly, but roughly there. This did not look like a move that wanted to retrace to me, because we've got basically just all of these fair value gaps here. So there's a fair value gap there. There's a fair value gap there, right? This to me was looking like runaway price action. These are probably breakaway gaps, which is something I'll talk about in a different video maybe. But the idea behind these gaps is that they're typically not filled, right? And so I had to look for something higher, some sort of lower time frame entry, higher up and closer to the open. Otherwise, I was going to miss this trade. So dropping down to the 5-minute chart at the New York Open, which you can see is right here. You can see on the 5-minute chart, we had this 5-minute fair value gap, right? And price is consolidating before the open. You can see at the open, what happens? We get a sweep into the fair value gap. Cool, check. Can we just enter right off of that? No, it's a little sus. Like, we're looking for some sort of order blocks to form and to take like a continuation entry off of the order blocks, right? So ideally, on a 5-minute chart, what you want to see here is you want to see a up close candle above the previous up close candle. So we get that right here. And then what you want to see for a valid order block is you want to see a down close candle closing below the low of the up close candle, followed by an up close candle after that down close candle closing above, right? So this is now a valid 5-minute order block. And you could have just taken an entry at this order block. Once this happens, you can see price respects it very nicely. I ended up waiting for a little bit more confirmation, and so I waited for another order block to form. You can see that forms right here. And you can see price closes above. And then I took the entry, started averaging in here on the retrace, and then you could see how very quickly price just turbos to our target right here, and that's all she wrote. Now, I took the vast majority of the trade off, but I did leave a bit of a runner because on the high time frame, oh, sorry, I got a very itchy nose here. Excuse me. Woo! On the high time frame, I'm still really bullish FARTCOIN, right? So if I zoom out on FARTCOIN, it sounds so ridiculous just saying FARTCOIN, but it is what it is, I guess. If I zoom out on FARTCOIN, because again, we kind of zoomed in and we were looking at this little scalp trade to this high, right? But there's a larger trade at hand here, because this entire zone here is wanting to take price somewhere, right? And the way I like to frame trades from these zones is to take the bodies of these zones. So this is the original sort of change in the state of delivery. This is the origin of the move, if you will, the base order block that gives the move up that we retest and goes. I like to use these SD range extensions. If I double click here, you can kind of take a peek at my settings if you want to copy pasta these for your own purposes. But I generally like to use the -2 and the -4 as my targets. And what I do is I like to look for levels, some key levels at those areas. So what jumps out to me at the -2 is that pretty clearly aligns with the low of this kind of key range, this key supply that gave this like kind of turbo dump down. This is the October 10th supply zone. So could see a rejection there. But the -4 lines up very nicely with the high of that area. So that would be my main target for this move. And I would probably also look for kind of some like intermediate liquidity here, just in case we end up putting in what ends up being like just like a higher low, and then we come back down. That always sucks if you leave too much size on trying to get all the way there. So I sometimes will just kind of not be greedy and you know, take profit at some sort of intermediate term liquidity. But I'm basically thinking that this, excuse me, this area here holds on a retest. There's a little lower time frame breaker up here. This is sort of like the manipulation zone that started the week. I tend to think price is going to kind of drift into here somewhere and then go higher, something like that. And this is a really nice trade. I mean, this is a 150% or so move from that area if it goes all the way. So I'm going to be monitoring this one for re-entry, planning on calling that out in the Discord this week. So if you want that entry, feel free to join. We've got the free one, the links down below. Also a link to the premium with the 7-day trial if you guys are into the real-time trade signals, portfolio updates, and you want a little like deeper education with me, that sort of thing. Feel free to check that out. Anyway, I hope that was a useful video. Hope that was cool. Hope that was educational. Please give it a like, and please give the channel a subscribe if you thought this was great and you want to see more content from me. Yeah, I'm going to try to make more of these educational things. It's a little hard to get the YouTube videos up. Spent a lot of time doing the Discord, but yeah, trying to get more into the content creating. So definitely keep an eye out for more things like this. Appreciate you guys watching, and I will see you in the next video.